What's up, guys? This is Carter Thomas with Coin Mastery TV, Wednesday edition. Yes. Make sure you're signed up for Chris and Rocky's webinar tomorrow. Go to coinmastery.com/live. All about the market, all about the current situation, all about trading. Chris has taught me he was one of the first people that taught me about trading and got me into crypto. So go check it out. It's a great, they have some great info. You'll learn a lot. All right. Now with that, today we're talking a little bit about BTC. I'm going to talk a little bit about bigger picture trends, potentially some good news. Hang on to your hats. Talk about the market itself. And then I want to talk about an interesting trend that's happening with Huobi and exchange coins. Binance is kind of doing this. That's been the theme of the week. I think it'll continue to be a theme of the week because it's good to go deep into some of these themes as you make your investment thesis. A little piece of macro info, and then as it ties into another piece of institutional investment stuff. Good stuff today. We're excited. We're fired up. It's beautiful out. Yes. So we are looking at Bitcoin. Nothing new. Same old chop. We did see this short squeeze yesterday. In my opinion, was definitely looking better than the traditional Bart Simpson spikes. Had a little bit different profile from an order book standpoint. Not going to get too deep into the details on that. But there's a couple things that I think are really interesting. One, if we go the 1 hour, hopefully we're starting to see the higher lows, right? So what that means is that the lows on these troughs, so starting really in May, at the end of May, every time we have a low, it's creeping up and going higher and higher. That's typically a good sign for bullish momentum, right? If we open up the moving averages on our different time frames, you're seeing that there's starting to be a cross on these moving averages. And the longer the time frame that the cross is happening, the more bullish the trend is, the more sustainable the trend is. So right now, I would say, at least on Bitcoin, the 1 hour is where you're starting to see a crossover. Now, I use 50, 100, 200. Those are very long and slow moving indicators because I tend to like to make sure that it's a very, what do you call it? Like it's for sure. It's certainty, higher degree of certainty than if you did like 4, 8, 12. Those are better for shorter term kind of trader type mentality. So at this point, I'm just trying to get a sense of where the trend is. So we've got some good signs. We did see this big dip, but I think we're going to see this pop back up. I think these indicators do want to get above there and push us up to the top of the triangle. I think that there's enough momentum to get us there. All right, now we're looking at the volume as well. I'm going to take away these moving averages just to clean it up a little bit. We didn't get a ton of volume on this low, which to me signals that usually it's a signal that, hey, this isn't the big dump, but the trend that's been happening, the short-term trend of seeing these higher lows happening, I tend to think that this is going to continue to creep up. We'll see what happens. Again, I'm not making any sort of trade on this yet, but I'm definitely getting more interested. Here's the other thing that I think is interesting, and especially for anybody who's new to charts and technical analysis. I'm going to take away the volume. I'm back on the daily chart for anybody listening on the podcast. So this is the way most people look at charts, at least if you're on TradingView or even if you're on any of the exchanges, it's with candles. Candles tend to be the default, the easiest to start to learn on. I would encourage anybody to start learning on candles. What you can also start to do, which is when you start to look at more professional traders, and this is something I aspire to do, but I don't do it regularly yet, is you can go up here in TradingView, go to the top, and you can switch over to any of these different styles. And if you go to bars, you can see how it goes black and white. Now I'm on daily, I'm switching to bars. And like I showed yesterday, in case you didn't see, you can go down to properties. There's this button for HLC. That stands for high, low, close. So what these bars indicate is that you get the high price, which is the top of the bar, the low price, which is the bottom of the bar, and then the close, which is where this little knob is on the right side. Now, if by default, it's unchecked, which means that you get the open price, which is on the left side, and then you get the close price, which is on the right side. Some people think that that's important, the open and close, but in a 24-hour market, it's not really as important in my opinion. So we're just going to keep it with the HLC, the high-low close. Now, on the daily, what you see much more clearly on these bars as opposed to on the candles is when you can start to see reversals. Okay, and this is true on any time frame, but this is when you get into what's called Japanese candlesticks. Again, this is the kind of stuff that if you're interested in it, it's very helpful. That's why you should go sign up for that webinar. If you're not interested in it, I would encourage you to at least learn a little bit because it can give you more confidence in your decisions. Even if you're just dollar cost averaging in, timing having a sense of these bigger trends can give you at least a bit of an edge. I mean, it can save you 10%, 20% on your entry point. So it's just good to know. So yesterday, this daily bar closed with the price at the upper area, right? Probably the top 20% of this bar. You can see that it had a low, but then it actually closed much higher than the day before. This is called a reversal bar. So I'll link this up if you want. You can just Google reversal bar. It's pretty easy. But in a bearish pattern, which is what we're in right now, like we're kind of moving down, and we're even in this mini area, we were having a couple days on the downside. When it's going down, you can see that this is a bullish reversal because it closes near the high, which is what we had, and the elbow is above yesterday's close. So the more distance there is between these two closes, the stronger the reversal pattern. So on a daily, from a daily standpoint, this is good. You know, sometimes you can go scroll back and you can see this. I mean, even back on May 23rd, you can see that there's a bit of a reversal bar, but this one wasn't as strong, right? The distance wasn't as much. We're getting more distance this time, which means that there could be some more reversal strength. That is why when you go back and you look at candles, kind of like what we were looking at yesterday on the 1 hour, you start to look at some of the action on the shorter time frames. But when you know that there's a bigger reversal potentially happening, it gives you more confidence in, hey, should I buy back into Bitcoin now? Should I start to scale in? Whatever you want to call it. So it's like a little piece of how you can use charts, even if you're not interested in charts, even if you don't care about it whatsoever, it can still help you. This applies not only to crypto, to anything you're investing in terms of, hey, how do I know if this is what the trend is? You know, you can also get in, if it's just for giggles, you can go to the 3-day and you could start to see what these candles look like on the 3-day. You can go to the weekly and start to see. Last week, we had a huge reversal bar. It gets interesting now. You see what I'm saying? Like when you start to zoom out, you start to see, hey, there's some bigger forces happening here than just on these day-to-day time frames. All right? So potentially good signs, but we're not out of the woods quite yet. Back to coinmarketcap.com. I'm going to refresh it. We're going to switch over to BTC per usual, flirting with this $340 billion market cap. Now, the big news yesterday was Binance. I don't think this video did maybe. I'm happy to, hopefully you guys went out and got some exchange coins this week as we've been talking about them. But of course, none of this is professional advice. You need to do your own research and decide for yourself. But I do really believe in that. You're going to start to see some altcoins start to pop today, tomorrow, Friday, the rest of the week because of this potential reversal. If this thing continues to trend upwards and you start to see more clear bullish energy, you are going to start to see these altcoins start to pop. This is the day when you start to make your plan. Are you buying Bitcoin? Are you buying Bitcoin and then buying altcoins with it? Are you buying Bitcoin and then you're waiting on the altcoins? Are you doing it immediately? Are you buying Litecoin, Ethereum? How are you going to deploy that capital, knowing that historically, in the short term, the altcoins are going to pump faster than Bitcoin will on these trend reversal areas? So that's what I would be keeping an eye on, just like last time. Last week I was looking at Tron, Zcash, and BNB, Binance Coin. This week I'm really looking at the exchange coins. I've been buying up a little bit here and there. That's probably what I'll be looking at again today. Now, speaking of exchange coins, let's look at Huobi. They are doing something similar to what Binance did. And you're going to see this. This is an ongoing trend. If anybody's been watching or listening to this Coin Mastery stuff for the past few months, one thing I talked about is how at some point, one company or a couple of companies are going to actually start making money. You're going to see a real business model with real revenue and people agree on valuations. As soon as that happens, you're going to start to see copycats. You're starting to see that with exchanges. This is going to happen in other niche markets too. All right. This is going to happen I don't know, off the top of my head, identities, payments is going to happen. Identity is going to happen. IoT is going to happen. But somebody's going to figure it out and start to make money. So you're seeing Binance lead the charge. Now, Huobi's coming after Binance. That's why I think it's an interesting purchase. So they are offering a $166 million prize for their own blockchain. This is starting to go from hey, we have an exchange. We have a business. Now let's build a protocol behind it. Notice that the other parts of crypto are going, hey, let's build a protocol and then let's figure out the revenue second. That's a much harder thing to do. That's why you always want to follow the money in business, especially in crypto. That's why I'm very bullish on revenue producing companies and tokens that appreciate based on the revenue that's being driven. It's very important, not the equity, the token value. So they're doing this. I would be you got to believe that they're just going to continue to do what Binance is doing. Huobi is actually opening up a strategic partner exchange in the US, I think next week, called HBUS. It's unclear if they're going to use the Huobi token, but the rumors, you got to imagine they're probably going to, and that they're also going to use the Huobi token for, funding this prize, this $166 million prize. They're probably going to start some new huge $500 million fund at some point, the same way Binance did. This is not rocket science. It's the same model, just replicated because it's making money. So this is why it's really good to start with the money and then back out from there, back out the scale once the revenue is figured out, as opposed to going scale first, then trying to figure out the money. In the marketing business, this is the same issue that a lot of people run into. They build a huge audience or they get massive traffic, and then they try to figure out monetization. Those businesses tend to have a hard time making a lot of money. The businesses that make the most money are the ones that figure out monetization, and then they go figure out the traffic strategies. Okay? Same thing is true when you apply it on a bigger macro picture to crypto. Does that make sense? I hope it does. All right, cool. Other piece of interesting news, VanEck. If you don't know who VanEck is, it's kind of like Vanguard, if you know what Vanguard is. If you don't know what they are, it's like an investment firm that builds and manages ETFs and mutual funds. I think VanEck is like 70-something% ETFs versus mutual funds. They are trying to they have joined forces with a company called SolidX. I tried to research SolidX. There's not a lot of information other than they are the ones who partnered with Gemini previously to try to get an ETF. It seems like it's a pretty boutique operation in New York that focuses on getting institutional money into the system. So they worked with VanEck, who obviously has all the compliance dialed on ETFs. They have probably very strong ties with regulators and CFTC and everything that needs to happen, SEC I should say also, for getting an ETF approved. SolidX has potentially the custodial, probably the actual crypto for collateral, and a lot of the investors and relationships. And so they're trying to bring this back. Now, the SEC chairman, or some people in the SEC, I think yesterday or this morning, released some pretty positive statements on the overall market itself. But what I think is really interesting is that it's good to see these ETFs just continuing to hammer on the system. Let us get in here. Let us get in here. Because when you look at the big picture, when you look at where we are on the stock market, and at least in the United States, but really globally, like equities and credit, it's going straight up. and it's got that bubble feel to it. And so we want this ETF hopefully to get in there as it's still screaming up, as there's all this cheap money, as people are still throwing billions and billions of dollars into US equities. That's very, very bullish. If things start to go down and this ETF gets approved, it loses a lot of its luster. So it's really good to see this. It's really good to keep these kind of this news in the forefront for you. But this, in my opinion, is a really good proxy as a way to connect what's happening in the greater markets, what's happening in cryptocurrency. This is like the bridge, and there's a bit of timing involved. So I'm glad to see these guys just going for it. Even if it's a synthetic ETF, meaning they don't own the Bitcoin, it's a marketing play. It's to get people interested in crypto before the other asset classes start to go into they start to complete the late cycle, right? These things start to decline because we want a Bitcoin ETF, synthetic or not, we want legitimacy from an asset class so that money flows into crypto, Bitcoin, and others when other asset classes are not producing the same returns that big investors want. And that leads us to the last piece, which is Jim Chanos. If you don't know who Jim Chanos is, he's the guy who famously shorted Enron. He's like a big short seller, and he is talking about Bitcoin as kind of like one of the biggest scams ever. What's also interesting is pretty much, I would say a majority of the time, people that are huge bears on Bitcoin and even short on Bitcoin, they don't necessarily understand the full picture of Bitcoin. Now, I'm not saying that anyone's right or wrong about this. Like, the market and time is going to tell. I'm obviously very bullish on Bitcoin, but I think what's super interesting though is that you see a lot of these bears, and what I see both online and offline is that when you see skeptics and you see people that are in the world of crypto, the arguments are very intellectual. It's like, well, it's digital gold and it could do this, and the network effects and all. It's all things that guys like Jim Chanos don't care about, right? They don't want to hear it. That's not how they value things. They don't understand that. That's just not the same way, right? And so when you look at something like the ETFs, when you look at the different value props, when you look at things like exchanges, when you actually can build an ecosystem, an asset-based ecosystem that's built on real revenue and real value. I mean, real is always in quotes when it comes to finance, like what's real, right? But you start to put it on the same terms as a company or an equity or some other asset class. That is the only way to change the mind of somebody like this, is that you can actually put apples to apples. More importantly, as pressure is put on other asset classes and investors are starting to look for returns elsewhere, that's when you start to see people change their mind as well. That's why you start to see banks. That's why you start to see CEOs. That's why you start to see all these people changing their tune now for crypto, because they know that something is coming in the next year or two for the global equity world, global markets, I should say. And they're trying to say, well, they're trying to front run that and get ahead of it because the money's got to go somewhere. So there's all these different forces that are playing to move interest, to move money, to move all this stuff into crypto. And as it all works out, the way the timing works, both with the charts, but just with kind of the macro energy or whatever you want to call it, the timing of this is all going to be really, really interesting to see what happens as money starts to leave different parts of the world, move to different parts of the world, and between different asset classes. I personally do not think that a down cycle in the global economy and then potentially the US economy, I don't think that would necessarily move into crypto yet. I don't think it's ready for it. I think that crypto is still way too speculative and risky for most people. Like, everybody. However, the more we get companies that are making money, like exchanges, the more we are getting legit ETFs that can prove out an asset that can be traded and it's big enough to have less volatility, the more we can get the asset class legitimized, the more money will actually flow in here from a downturn in a different asset world. So, stuff to keep in mind. Again, we're going to keep an eye on this BTC thing. Definitely getting more excited now for this kind of zone up to the top of this triangle. One thing that you can look at also is the retracement on this. So if you go back to the, what is this? Early May, the peak here where it hit almost 10,000, come down to this bottom on the 28th of May. It's bouncing right off of this 23 level of the fib, but hopefully we charge right through that and we can clear it out. You can see that this 8,100 to 8,500 is going to have a lot of congestion, but we are on the 6th of June. Today is the day when everything is supposed to be, when everything goes bullish based on the themes. Haven't really seen it yet. Again, I'm not banking on that personally, but keep an eye. If this thing does go up, keep an eye on these levels and keep an eye on that 8,100 to 8,500. If it breaks through there, we may have a little runway for at least the short term. Cool. All right, guys, 2 things to remember for anybody who's still around. 1, hit the thumbs up button. Thank you very much. 2, go sign up for Chris's course, his webinar, the whole thing. coinmastery.com/live. You'll learn a lot. It's all free. Go check it out. And I will see you guys tomorrow. All right. Peace out.